Darren, obviously you and your team must be watching the Middle East very closely right now on a day-by-day or maybe even hour-by-hour basis. What's your assessment of where things stand and what that in turn means for the global supply of not just refined product, but of crude oil as well?
Well, as you say, it's kind of a evolving narrative every day. We've gotten out of the business a long time ago trying to predict what's going to happen. Instead, make sure that the business is resilient to whatever comes our way. And I think we've demonstrated this quarter that irrespective of where things move, the company is ready to respond for that. And we've got a business that will be successful kind of in the high markets and in the low markets. And so less focus on that. What I would say, though, in the long term, that resource in the region has to get to market. The strait has to open up. It is the main artery of supply for the world that powers economic growth everywhere. And so eventually those barrels are going to have to flow. And the only question is how long will it take to get to some resolution here so that the strait opens up and that production can come back on in the Middle East. But I think, medium to long term, the world needs that resource. And I think governments will find a way to make sure that resource is available to the world.
Do you have ongoing conversations with the administration, with the U.S. administration, as we're watching oil prices climb and prices at the pump climb?
Well, because of the large footprint we have all around the world and the breadth of our operations, we try to make sure that not just the U.S. administration, but frankly, administrations all around the world, in Europe as well, understand our perspective of what we see and how things are playing out so that they've got the best information to make policy decisions. So we're very much sticking our lane with respect to here's what we see, here's how we think it could potentially play out, and make sure that policymakers have our best thinking when they're putting together their decisions and the approach that they want to take moving forward.
Darren, I know when we've spoken with you recently, you've been a little frustrated with some of the European lawmakers in particular, just about what they're doing to make it tougher to operate and do business there. Are they more receptive now that other lines of some of their energy have been cut down?
Unfortunately, no. I think, I stay in pretty regular contact there. And Frank, what you see happening is additional regulations coming out. They've got a methane regulation that comes out in January of 2027 that, frankly, nobody in industry can meet. And so products are going to stop being exported into, or they're not have the imports available to them because they've got a law that's coming into effect that, frankly, nobody can meet, and a penalty that's 20% of your revenue. And so I think they're doubling down on what is some very bad policy, and we've been trying to explain, particularly in a time like this where the world is short product and the EU is in particularly short in products, that you should have policies that open up trade and give you access to as much as possible rather than continuing to try to constrict it. To date, we haven't seen a very good response there, but I tell you, they're heading down a path that doesn't have any real positive outcomes. And you still aren't getting any, what will ExxonMobil do as a result? Well, our policy around the world is we don't knowingly break laws. And so to the extent we can't comply with a regulation for importing oil and gas, we won't import oil and gas. It's pretty simple and straightforward. I think the EU has been looking at, we'll waive the penalty. And our position has been, frankly, we don't choose which laws we follow based on the size of the penalty. We try to follow all the laws. And so they've passed a law. They expect us to meet it by January 2027. It can't be met, and therefore we won't be able to import product or crude or gas, natural gas, in order to run our facilities there. That's a significant issue, and it's one that the entire industry is facing. Anybody who's importing product has got a problem.
Darren, I hope I didn't miss anything on this. Did anything settled on Venezuela? I know, is that still in the works? Where does that stand? Because I think you're going to do something down there, aren't you, or planning it?
Well, we're kind of good morning, Joe, by the way. We're heading down the same path that I talked about in January, which is, as I mentioned in January, there's a lot of structural reform that has to happen with respect to investment guarantees, fiscal policy, legal frameworks, and what have you. And we're working with the Venezuelan government on the ideas that we have that could support additional investment. We've sent technical teams down there, so we've been evaluating the opportunity set. We see opportunities in a role for us, but those discussions continue, and it's really around, are we going to have the right foundation and framework that gives us the assurance to go back in and make investments, and then are we going to have the right opportunity set and acreage to develop things that we think will be generate the returns that we need and justify the technical capabilities that we bring to the country.
They need you, isn't it? It's heavy, right? And you're an expert with Canadian heavy oil, and I mean, it's a match made in Venezuela, match made in heaven.
Well, I do think we bring, we've got a history there. I think we've demonstrated when we were operating before that we can deliver results that exceed what many others can do. And as you point out, we have a very deep technology bench with respect to heavy oil that we think would be directly applicable to the resources there. And ultimately, it's important because that is a heavy crude. It's a high-cost crude. If you're going to get on the market and compete, you got to develop it at a very low cost. So you got to have technology that helps bring your production costs down. We've got that, so we think there's a role for us to play. But ultimately, it'll be good for Venezuela, but it's got to be good for our company and our shareholders. And so that's the discussions that we're having today.
Hey, Darren, you said you're out of the predictions market. You guys don't like doing that, and I understand that. But you're obviously somebody who sees how things are aligning when it comes to crude prices, crude availability around the globe, refining ability. Prices at the pump have continued to rise to the frustration of the administration and the consternation of consumers. If you had to guess, which way do you think gas prices are headed for the remainder of this year?
So one point I make, which has been reported pretty broadly, there is a disconnect between crude prices and pump prices. Historically, when you didn't have refinery constriction, so you had all the refining available to the world. I mean, my 35 years in the refining business, refineries have always been long. There's been excess supply, and so that's never been the constraint. And so the pump prices have been heavily influenced by crude prices because that's the main driver of cost when you have no refinery constraints. There's a disconnect today because now we have a refinery constraint. So pump prices are being established by the supply and demand of refining petroleum products, not crude. That's one of the reasons why we haven't seen crude rise as quickly as people have thought, or we didn't see product prices fall as crude prices came down, because there is this disconnect in the marketplace. And so one of the things that's going to have to happen is we're going to have to get capacity restored and back on the marketplace, either by opening the Strait up and getting product flowing through there, and China bringing additional exports into the marketplace to reestablish the link between pump prices and crude. And then my expectation would say you'd see some of that crude price begin to rise. But until you get flows established in resupplying the marketplace, I think we're going to see prices consistent with what we're now experiencing for quite a while yet, as we've got to get the Strait opened up, and then we've got to resupply the inventories and get things moving. So I wouldn't hold my breath here in the short term for that.